Alright, so before I start off with this new video here around order flow and how I trade, nuances around tape, footprint, and all that, I just want to make sure you guys could always contact me through social media. So here are my contacts here within the various social media accounts that I have. I've had a lot of great comments around my previous trading videos around Nasdaq scalping and all that, and also how I did some videos around my recent trading. So I just wanted to make sure that I mean, I'm trying to at least give a real way of how I trade, and at least I could help several traders. So in our previous video here, I had covered, the market profile, the auction, market theory, the main books that I recommend to really validate how to trade with a market profile. Today, we're going to mainly cover volume, how I will be able to, validate certain setups and certain things. Throughout these videos, this series that I'm putting out, we're going to cover really market profile and its nuances, the various day types. This is going to be in a future video where I'm going to cover how there's good ways to, find market context around all this. And for today, we're mostly going to cover volume. How volume is a key driver of the markets, right? When there is basically no volume, basically it's anything could happen, right? A big player could just step up and start selling that market, and fill all that until liquidity dries up, and then you get reversals from buying to selling to buying to selling, and that's basically what causes a lot of volatility in the markets. For one real thing that's going on as of today, what's happening is that the market is really in a very volatile session today, and it's probably because you've all kind of noticed the liquidity kind of dried up on ES. So this is a DOM from ES that I'm bringing out. I'm just going to try to put it on the screen at the same time. Look at how the market's been trading today, and basically when markets are going up, and it's like everyone's got this thesis where it's never going to come down, right? And then basically the market could continue going up for a very long time until even with low volume. So those, like, you don't want to really rely on low volume as an indication of change of trend immediately, but at the end of the day, volume is the most important aspect of an order flow trader. I just noted here high volume nodes, volume point of control, low volume nodes. We're going to get to details of how we could find executions and market context around these, but I generally like to have a good view of what the daily volume is on ES. I would consider 800,000 and more as a good volume day, and just to double check that, you want to also double check with the market structure. Like, that's something I'm going to go over when we get to the day types, where you want to make sure if the volume was very high today, was it a double distribution day, was it really trending one side, and how was the volume, was it low? And normally speaking, more you use the volume profile, you're kind of going to get used to like what kind of volume builds up in the first 5-10 minutes, right? Where is the highest volume node within the first 5 to minutes? Where is the highest volume node within the first 10 minutes, first hour? The initial balance. You could kind of validate continuation and trend days with this kind of information, especially at the open. With high volume nodes being sometimes tricky areas to trade, because there's a lot of stops around that area. You want to make sure that if you're entering on a high volume node, you want a quick reaction, or else it's going to fiddle in there and you're most likely going to get chopped. Low volume nodes tend to give great entries, especially if it's intraday. You could basically play them as support and resistance levels, but again, all that will vary a lot, especially depending on the volatility of the day. So here's a volume profile of today, and as you can see, we've got some low volume node at the higher levels. So basically, in my notes here, I have the last 4 days of the ES that has caused basically a consolidation. And I went out and drew my levels from those 4 days, and really what came out is this 86 to 87 level in ES is basically the value area of the last value area low of the last 4 days. And if I was to quickly look at where the value area high was, it was around the 97.50s. So although the market spent some good time above it, it kind of left a low volume node right on it. You see 97s. So, I mean, again, it's never 100% perfect, but if we are rejecting with lower volume at this level, and then we're also rejecting lower value around this level, which was the value area low, it kind of gives you a perspective of the last 3-4 days. So coming back to understanding what the market's been doing in the last couple of days, the market structure, and also the various context of the context of the market of the last 3-4 days, we've been having 4 days of consolidation, and you want to kind of have a better information with those 4 days of consolidation, and validate where most likely value is. So that's pretty much the only time I could really use a value area high and low, especially if it's kind of consolidating for the last 3-4 days. I'll combine the profiles together, but to keep it simple, I think you kind of have to use those high volume nodes and low volume nodes in context with what the market's been doing in the last 3-4 days. At the edges of high volume nodes and all that, I understand that a lot of volume profile traders kind of look into that, but then it gets a bit more nuanced as the day goes through, because what happens is you kind of tend to have a bigger bulge here, which is going to be like the high volume node of this whole area. And as you could see, it's almost like 6 to 10 points here. And then you have some lower volume with some tapering, which means that the market basically kind of rejected this area, right? It's never 100% correct, because depending on how the market is moving, as you can see here on ES, we're moving up with decent 50 lots and 40 lots if you look at the last traded quantity here. So you want to see if these areas hold, you could kind of keep them as like inflection points to see what the market does above that. A lot of trend traders want to buy and sell where at these inflection points, and it's still a reliable and consistent trade setup on a daily basis. But the most important thing, I think, for volume profile traders is to really validate what's been working in the last several days, what's been working on a volatility perspective, because I think today we've got a decent volatility. And when I look at my the last, what is this, almost the last 5-10 minutes, just in this rotation we've had 67 all the way to 74. It's like a good 7-point rotation here. So let me just erase that, and as I talk, let's see how the market plays around with these this range. It was 67 to 74s. So I mean, volume profile is definitely an extremely valuable technical analysis, that tool there, where a lot of traders will use everywhere in the world. Just that you kind of have to acknowledge the fact information that the volume profile is giving, because it's basically not just trend lines and an oscillator indicator. It's really what kind of volume is being presented to you, and you're discovering support and resistance as the day's continuing, as the day develops. This way, it's not really a predicative or a proactive trading method, but at the end of the day, you could really consider trading with volume profile in most liquid markets. And what's really essential is to have a good idea of what kind of volatility and what's the traditional liquidity in the market that you're trading. you're able to see the volume profile through a dome with various platforms. This is Jigsaw that I use for my trading. I kind of find that it's just super easy to have, one side the footprint of what kind of volume prints on the ask and also on the bid, and then I have the depth here on the dome. You know, it's just that you need to really repeat and review the market in this manner to really get used to trading volume profile on a dome like this. It's important. I don't think a volume profile is just about 1, 2, 3 step where, if it does this and it does that and 1, 2, 3, it's kind of like an indicator. No, it's really important to have different models and what kind of interactions happen on the market that you're trading. And when it rejects a certain level, how far kind of a rejection should you kind of let it do? What's like the threshold risk tolerance that you want to have on a trade, with inflection points around maybe the previous day highs and previous day lows. You want to validate a value area high and low of a certain range, like the example I gave around consolidation days. It's just that you need to have a way to validate what setups work when you combine the dome and, let's say, also a footprint. So if I show you guys quickly, this is a regular footprint. You can have the dome like this. You can have the tape. These are all order flow tools that give you pretty much the same information, but on different way with different ways to validate certain information that you would get from the market. Tape reading. My daily goal is to really observe and define the rotations, and to kind of have a good idea of what the market's doing around certain levels. So I'm able to kind of filter that through tape and also through footprint. The issue is because when you're basically not in front of the screen all day and you've got ideally the first hour to trade, you can't really just validate the information with a basic chart, right? The chart here just gives me basically what I have here is the last month's of volume by price, and then I have where the most volume happened, and then the absorption levels on the delta volume profile here. You could look for divergences between all that, but at the end of the day, it's about where volume builds and how you perceive value of the immediate trend. So yeah, I kind of like to bust my head, let's say 15-30 minutes in the first initial hour to have an idea of which levels seem to be working very well and kind of concentrate on the movements and the rotations of the market. This way, when I'm stocking a trade, I want to make sure I'm putting my orders in areas where I'll get quickly filled, and it's all about me being able to view and kind of have that approach to the market where I know that it's doing this or it's kind of rotating in this amount of number of ticks. And generally in Nasdaq, you should have 15 to 20 ticks as a rotation, but on ES, you could get to 4 to 8 ticks, right? Is it faster than that? You have to adjust your entries then according to the volatility of the current market. And the only way you could really kind of have an idea of that is where is the buying and selling kind of sweeping the book. So that's something you could easily detect through the tape. Where did my tape go here? Here we are. So this is the only purpose why most traders are kind of sorry. This is the only purpose why most traders are validating what the tape is doing with these 1 lots and 4 lots. I easily play around with the size filter here, and then you want to see the blocks at either 20 plus or 99 plus depending on, and you can have 1 or 2 of these tapes just to give you maybe the flow of the current market. So it's every trade here, every market order that goes through here on the tape. And then you have various coloring here, which definitely helps as it gives you an idea of where they're sweeping. Like personally, I have blue and red for uptick and downtick, and then I have cyan for the sweeping on the ask, and I'll have purple like this for the sweeping on the bid. So it's quickly ways to monitor what kind of orders and what's really going on. Unless you don't have a tape, you'll see here I have last traded quantity on my dome, which kind of gives me an idea of where and how much volume is required for your entries. So for instance, in this move here, we've had quite a nice move down, right? And let's say I was to go short, I don't know, at this level, I'm basically waiting for the market to come to that area, right? But I'm probably way too far from the current volatility. So it's a way to validate where and how fast the tape is. So if you scroll down from all the way the top to the bottom here, quick tip I can give you is, from the top to the bottom of my tape here, how many seconds is required, right? So that kind of tells you how fast your market is, and it's the only way you could really kind of put some context around tape on thin markets, because most thin markets like Nasdaq or crude, if you don't know how many seconds it's taking for the whole tape to fill in within your screen here. Again, my screen is just a standard screen here, but I mean it kind of gives you an idea of how far the market's moving within a certain number of seconds, right? And I've kind of found that as a human being, let's say, as we're not robots, we're not bots, we're not algos here, we're human beings. And for a human being, there's a certain threshold that this tape should not exceed. Because other than that, it's almost impossible for me to have orders at decent levels to be able to, gauge where the market is really giving a battle, right? So I mean, again, if you look at your previous trading reviews or recordings, and you kind of notice like you're trading a market where there's like 50s, hundreds, 200 lots that are, banging into the bids and offers constantly. As a as a retail trader who wants to trade maybe 1, 3, 5, 10 lots, whatever, you kind of have to know where is there any odds of you being able to trade that market in an easy manner, right? So that's why, like in an area where like a period where we had huge volatility within the pandemic there in 2020, there was a moment where as human beings there was basically no possibility of trading because the market was doing, especially for Nasdaq, let's say it was doing like 20-point moves within split seconds. There's no edge in trading those kind of markets. So like I said, I always want to watch how many ticks and rotate and watch the rotations that the price is doing within a certain number of seconds, and this allows to gauge kind of like where you need to put your orders. Once again, you can apply this um, to every pretty much every um, uh, pretty much every market. It's just that every market has its nuances, right? So in my experience, the speed of tape, the velocity, how the market is approaching your entries, these are very key elements to trading the markets. So personally, I keep repeating to myself every day when I'm trading that the only way I could make money is if I understand what the market's doing, right? Because other than that, I'm basically gambling. If I'm not able to understand how far the market is going to move, how far it should be doing, like what kind of rotations it should be doing, I'm basically gambling. And that's something I want like most traders to understand, that you're basically not trading a level. So if the ES is at this level here at the 72s and I've got an entry here at the 68s, but my current volatility is telling me to trade within 4 to 6 ticks, I'm way too far out and it'll take me forever to get filled. And when I do get filled, it depends on when I do get filled, let's say, it depends on how fast the market moved into my entry. Was it moving in very slowly? All these affect your entries. And I think as traders, if we perfect our entries, I mean, we try to get our entries to a perfect level, at the end of the day, this is what's going to make a difference for our trading, right? The most important things with as a order flow trader for me is when I look at this, I just don't see candlesticks. I don't see numbers. I see where is value. A lot of volume was printed here. A lot of volume was printed, let's say, at this level, right? Where is the market rotating within this whole range? And this is just a 20 tick PNF chart that I use for NASDAQ to see like where the low volume was, like here. And when NASDAQ will print low volume like this, what generally happens, right? These are the things that you need to validate, because more and more I record, more and more I understand and learn new things around my trading, and also the way the markets I trade kind of trade, you know. So again, if you want some clues, you want to know how your market behaves, go open up footprint charts like this and validate where there was low volume, where was high volume, what kind of volume is required when it's absorbing at the lows and the highs, what kind of rotations do you want to look at when it's super volatile, how far and what kind of how far should I put my orders to be tagged in, to be basically filled for my entries. And that's pretty much how I select my stops, my where I'm kind of wrong when I'm stocking a trade. Again, I'm focusing mostly on the one lots and the regular you know retail, how the market's kind of playing around certain levels. Is there a lot of absorption? And the absorptions, you'll see them very clearly on the jigsaw dome. So if we look at it here, there was basically 477 versus 268 at the 76s. So there was a passive seller that absorbed at this level, right? And then you got very serious sellers at the 75s, which sold into the bid. So I mean, if you leave your footprint like this, and I just want to make sure I cancel that order before I get filled, you could basically validate from which level to which level how much volume was printed. And with these ideas, again, the only way you could really have a great idea of what kind of movements your market is doing is through recording, screen recording. You need to record your screen. I would say always record the first hour of trade. Like every day, first hour is so important. I would put less, for me personally, the way I trade, I would put less importance in the last 30 minutes. I don't really tend to like to trade in the last 30 minutes because obviously there's a lot of two-way action, and you'll have market makers and also a retail kind of trying to close their positions. So there's not really any kind of for me personally, I don't think there's any kind of edge in understanding and trying to decipher what the market's trying to do in the last 30 minutes. So once again, velocity, volatility, all these have importances when it comes to the way I trade. And I generally like to trade 3 to 5 contracts when I'm, in a pretty good mood, and I'm trying to, validate how busy I have to be within a specific day, because sometimes some days you really need to understand that you need to be able to trade more certain days, because as a trader you have a lot more opportunities, right? So some days where the market's not doing its regular things, I'll try to kind of focus on my trading for the first hour and not have a lot of trades after, because this way the first hour I know that everyone's trying to do their business and everyone is there. I don't care about what kind of participants we have here, because at the end of the day it's me filling in my orders and me playing against all the other traders in the world who want to all benefit from speculation, right? So look at how the market is moving up here, and that's the nuance. When you start seeing a market that was going down with 50s, 80s, 100 lots, and then all of a sudden it starts moving up with 15, 20 lots, that's like a change of, there's a change of speed there. There's a change of volatility, right? So these are the most important aspects around order flow, because at the end of the day, order flow has become, a huge thing when it comes to retail traders. Everyone wants to learn order flow, right? But order flow is, again, not just tape, it's not just footprint, it's a mix of how you can get all the information here and use that information when you're trading. And not one day is the same. So you need to validate as a retail investor what kind of days and what kind of volatility are you able to cope with, right? So I believe I covered pretty much everything I wanted. So in the next videos, if I could just quickly share this, I'd like to cover certain other aspects around why I trade the futures, right? What aspects are important, and then what I think of technical analysis. How come execution is so important, right? How do we filter all this? And maybe we could cover some of the trade setups that I look for when it comes to dome, tape, and footprint. And hopefully this could kind of help. But first of all, as retail investors, you want to understand that the top rule is to learn to cut your losses quickly, right? You want to have an approach where either you're going to always size in with the same amounts, ones, threes, 5 lots. I don't know what's a good position size for you, but if you can't make money with 1 lots, you probably won't make money with more. So how do we adjust our targets, stop levels, and then on a daily basis, how do we reevaluate objectively the intraday movements, right? So all these are going to be important aspects that I'd like to cover in future videos. Hopefully this kind of gave you a quick glance of what I look for, and don't hesitate to contact me. Hope this helps, and we'll keep in touch for the next videos.